What's up, everyone, and welcome to this week's live. This week, I will be doing a session on trade recaps. This will just go through the 3 trades I've taken for the week, 2 on GJ, 1 on EURUSD, all 3 losses, 1 invalid trade, so a trade that didn't meet the plan. But in hindsight, potentially did. We'll check it out in a minute. It's just something I was debating on earlier. And then 1 mistrade from this morning. But a mistrade that didn't meet the plan, my plan, but a mistrade that was a really solid trade that I was literally watching play out. And there were quite a few other concepts that was just that were just playing out. And yeah, I was just in a heavy flow state as I was watching it play out. And it was exciting in the moment, but I was very focused, but it just didn't come to my entry, the one that met my plan, but price still played out lower. And arguably would have been a break even if I managed it according to my plan. So yeah, that's something we'll take a look at, and I'll just log that as a backtesting trade in this session. But yeah, this is kind of just to bring a bit more awareness to the quality of trades that I'm taking, just continuing on the theme of detailing or just getting into detailed trade reviews, just so that I can observe certain confluences and behaviors of price, and of my strategy, as well as I kind of look to refine it in the last few weeks building up to the challenge. So yeah, the plan hasn't changed as mentioned in my weekly review. So you're all familiar with the plan. If you're not, this is it from the high time frame perspective. And then once the high time frame criteria is met, the lower time frame execution checklist. So yeah, 2 on GJ, 1 on EURUSD taken, and then 1 on EURUSD missed. 1 was pullback rider, second was a resistance trade, and yeah, as mentioned in my backtesting live last week, I kind of took you guys through how I differentiate through those different setups, just based on whether 4 hours pro trend, but and pro trend entry, or counter trend entry, or counter trend and pro trend entry, or counter trend and counter trend entry as well. So 4 different setups, and let's just get into it. So this is the first trade, and this is the template, same template. I think we'll just go through this criteria, but I'll show you how that all played out here on the high time frame. So first thing I'm kind of looking at was the interbank price delivery algorithm noticeable? That's our consolidation, expansion, retracement, and continuation or reversal post that expansion. This is where the trade was taken. It's a safe color. Let's do that. So yeah, that's where the trade was taken. This is where the trade was ultimately stopped out. You can just see by these little arrows here. And so I said no in this, because if it was, we would have seen that consolidation beforehand, before that market open, and then obviously the expansion in one way, retracement, continuation, or reversal. And we didn't. We distributed, I guess, to the upside. And arguably this was a consolidation, and then we expanded here. But I'm also looking at it relative to the session itself. And so the session began at 3. At this point, price was already kind of distributing higher, so nothing really at that point. I think there may be a trade where it does play out, and hopefully I can show you an example of that. But for this one, no, it wasn't. What was the nature of the reversal candle? It was an engulfing. This was the candle that I took the position on, this engulfing here. So that was an engulfing. Just tracking that for now. I'll probably add that as a tag just to see what sort of entry signals respond best or play out more often than others, because that for me is the primary indicator of when I get into the market or not. And then quick, so it's a bit strange, so I'll start on the execution and then I'll build my way out. You guys will see. So by the end of this, you will have a clearer picture of what the entire setup kind of looked like. But then did a secondary order block form? No. Just basically looking at where I took the trade. Was it in a high time frame order block, either 4 hour, 1 hour, and then on the low time frame 15-minute that I executed on, did another order block form there. Order block did form here, but we were taking this within a fair value gap. You can see this region here, that was the hourly fair value gap that we were trading in. So wasn't a secondary order block. And then was there more resistance to the upside or downside? And then this is where I kind of start to take a bit of a high time frame view. I said there was more resistance to the upside, as we had 2 4-hour order blocks resting above and no key indicator areas below. So let's just verify that. So we switch to the 4-hour, get our rectangle ready. Let's see here. The first order block that I made reference to was this one here. That's the first order block that price traded out of. So from a high time frame perspective, yes, we were trending to the upside on the 4-hour. And so this was essentially a counter trend position in nature. And then the second order block that I was referring to was this one here. Hence, I had said more resistance to the upside because we had these 2 strong levels here that were rejecting, or at least at the time of entry, this was what, or these were the barriers that we had to the upside. And then to the downside, there wasn't much in terms of, let's get my drawing tool. Key wasn't much in terms of key indicator areas, but when I'm thinking or looking now in hindsight, we were taking out liquidity to the upside, or that buy side liquidity constantly being ran, and sell side liquidity was being respected. So a bit tricky in that sense. But no key sort of indicator areas, especially on the 4-hour. Hence, I'd said more resistance to the upside because we were at a barrier. I think building up to that point, obviously we were in this low resistance range here. So there was nothing up till we got there and mitigated that. And then once we've then mitigated that, I guess the only really clear order block was here. So effectively looking for price to come lower before ultimately coming higher. And then did the market distribute counters to the protraction over the session? I said yes, but it actually, in the session, it didn't. So this is actually wrong. And this is why this is good, because I feel like I'm going to pick up mistakes that I may have made during my journaling sessions. So we saw that price was distributing higher. My stop ultimately was hit. And so we can say no, price distributed to the upside over the session. And then from a daily perspective, was price still in the daily sort of equilibrium premium or discount area, or well on its way to take profit? And this is kind of where I picked up that this was an invalid setup, or a setup that just didn't meet the plan, because this was my daily range. And if I project the fib, my EPD starts at 50%, which is a green line that you can see here. And as you can see, we weren't in EPD. And if I come back to plan here, plan clearly kind of says, asks if price is at or mitigated equilibrium premium or discount. If we haven't at the 4 hour establish a trend towards equilibrium premium or discount, yes, assuming that the trade is in the direction of the trend. And this is where I think a bit of ambiguity came into the plan, and where I maybe didn't have my rules clearly defined, and I've made note of this. So I think I will want to get more clear on this, but I know what it was at the time that I drafted it, because I'm technically saying that price doesn't have to be in that daily EPD, but we at least need to be pulling back to that, because obviously if we're not in, for example here, if we're not in premium, it must mean we're in discount. And if we're in discount, then obviously we're favoring longs. And if we are at least trending towards premium, it means that price is obviously respecting the fact that it's discounted, and we are trading higher because we want to buy in discount and sell in premium. And so I can then I have appetite for setups that or long setups in a discounted area heading towards premium. Hence, I don't take a trade if we aren't heading towards or have established a trend towards that. So what that automatically means is any trade that is counter to the trend towards EPD shouldn't be considered. And in this case, that would be short setups, because price trending towards EPD, but I was looking for a short setup, which was incorrect. And where I'm questioning that is, we could arguably have plotted it from this high here. And if that's the case, then yeah, then it becomes questionable, because obviously then we are at equilibrium, borderline, reversed from premium, that 62% level. But if I go back to my weekly analysis and my weekly forecast, for me, the plan was this was my daily range. That was more of a 4 hour range. And I concluded for the week that price was not in EPD as we were trading higher. So technically should have only been looking for longs. And that's something that I need to start doing more consciously, is looking at what the weekly plan was, and then making sure that each day I'm trading in alignment with that. Obviously, if something's changed, something's changed. But hence, yeah, that's why the setup was effectively invalid. And then when did price complete protracting? This takes us back down to the 15-minute. And I'd said before the kill zone open, that's just something I'm taking note of as I start observing pair tendencies. Some pairs like pound JPY, because it is uh, obviously a yen cross pair. It's quite active, can be quite active during Asian session. And so as Asian session closes and London opens, or obviously there's just the increased liquidity in that crossover, it can get quite impulsive before the kill zone open at 9 o'clock, obviously SA time. Other pairs like EURUSD, normally at the open at 9 o'clock when London starts trading, predominantly a euro pair coupled with obviously a dollar as the cross, which only opens later in New York. The liquidity only comes in from about 9 o'clock, rarely before. So that's just to start taking note of those minor details. And if we look at this, we were protracting. I said before, but it was definitely after. What was I on this day when I was reviewing this trade? So that's that. Does a 1 hour EPD align with where the markets protract to? I said yes at the 79% level. And this is something that I think is going to be a key sort of observation, because the 1 hour guides the daily bias quite accurately. And trading in alignment with the 1 hour, within the 1 hour range, I've found is quite, is something that that price responds well to, at least when like over a day or so. And so this was the range that we were trading in, while this was my entry. I was only stopped out up here. Like I mentioned, I was trading within this 1 hour fair value gap here. So my stop was just above there. See where I was stopped out. So we did pull back to this turquoise line here. That's a 79% level, or just below that. And then we distributed lower very briefly over Asian session, but then we ultimately came up higher pre-London the next day, which is where I was stopped out. So we did a line. If I was trading Asian and got an entry somewhere in there, that would have been a nice move. Oh, I skipped all of this and just jumped straight down here. Sorry about that. So then we've established that price distributed to the upside, and then price was not in daily EPD. 4 hour was price in EPD. I said yes, it was still in EPD at premium. We can confirm that on the 4 hour, and this is pulled from that 4 hour range that I was showing you guys. That is pulled from. For the next trade, I'll definitely fix up this fib tool. Just irritating that you can't add templates. But yeah, you can see from this 4 hour range, we were at that 62% level, still within equilibrium around the time when we took the position. So that was fine, that was met. A bit of conflict there because obviously daily was still in discount, but 4 hour and premium should have prioritized the high time frame, the daily. But yeah, I want to observe the relationship between those two. If when they are opposing, what price typically sort of respects more often than not. So yeah, again, another observation. And then I look at my stop. GJ is not a pair that I've back tested a lot, so not enough data to determine an average for USD ZAR or USD I have. And then I've obviously just put my stop in there just to show what it was over time. Then I'll be able to determine what an average is. And then takeaway from a recent lesson is looking at obviously if you've identified the correct entry area, you could time your entry incorrectly, or you could just get stopped out during a liquidity sweep or raid on highs or lows. So looking at if I did re-enter, if there was an opportunity to re-enter, what would the outcome be? And looking at this from two perspectives. One being, let's say I obviously risked 1%, I lost 1%, and then in the second trade, I enter with half the risk, but then targeting 2R just to recoup my losses. Obviously, the 0.5% when I get to 1R, that's obviously 2R is then a full 1% gain. So then I would have basically broken even on that pair or position essentially, or move. So that would obviously be a more constrained or conservative TP because I'm just trying to get back to break even. And then the second scenario is looking at if I aim to maximize profit based on a normal TP range, or where I would normally set my take profit, then what would the outcome be? So looking at those two, there was an entry, and there isn't always another entry opportunity. It just depends on whether the bias was correct, because obviously if it doesn't play out in my favor and it just invalidates the bias, then there's nothing to consider. There's no further entry. But if there is, then it depends on whether I would have been able to enter again. In this case, there was an entry, but I wasn't able to enter again just because I think of the time that the entry formed. So let's just take a look at that. So you can see where I entered, where I was effectively stopped out. And then after being stopped out, we continued trading higher. We then traded into this purple area, which remember is the 4-hour order block. When we traded into the area, we ran or swept liquidity to the upside, and then consolidated a bit, and then we did reverse lower. And so while there was an entry here, and this was yesterday, 9 o'clock, literally at the kill zone open, which means obviously that the protraction would have occurred beforehand. And then on this reversal candlestick, this retrace, I would have entered there with stops above. My minimum risk to reward is a 1:3. So yeah, that would have made up obviously for the 1R or 0.25% loss. I keep my risk fixed at 0.25%. So technically, if I took the same position size, I would have just needed a 1:1. But I looked at it from both angles. So if it was just a 1:1, you can see I would have achieved that within this first candlestick here. If I'd set it to max TP, then or not max, because minimum would have been just kind of like the minimum criteria I look at. So because I take the same position size, I would have just targeted a normal 1:3, which is the minimum risk to reward that I look for. Then I would have closed out here with just under 3R, because at my first TP, I close 50% of the position and then move stops, break even, and then close the balance here. So essentially 0.5 at 0.5% profit, close half of it, so bank 0.25%, that's the loss recovered, and then leave 0.125 running to 1:3. 0.125 by 3 is 0.3. What is it? Help me out here. 0.375, I think it is. So 0.25 plus 0.375 is about just over 0.5% profit, instead of, if I left it for a full 1:3, that being 0.75. So yeah, that was achieved. The reason I didn't take it was because I was in a meeting at work at this time, literally a meeting that started at 9, but obviously get in the meeting like 2-3 minutes before 9. And I've got a rule that I don't take trades during meetings. So yeah, that was a mistrade. Yeah, would have recouped those losses. But a good point to kind of observe in hindsight. And then sort of additional thoughts that I have or had, I said the setup was invalid, it did not meet the plan, but if I were to take the trade from the 4-hour order block, it would have been a profitable setup. That's something I noted. I prioritized the 1-hour order block, or 1-hour fair value gap rather, over the 4-hour order block, which was resting above. And I showed you the 1-hour fair value gap, but there was another fair value gap on the 4-hour. As you can see here, the key, or the devil, what is it? The devil's in the detail, something like that. This was the fair value gap. And this is something I'll start observing as well a bit more closely, and I'll just change the color so you guys can see. We have a fair value gap here, and while that's fine, that's an area where we can take trades in. I also have an order block resting above that fair value gap. As you can see from how the trade played out, taking the trade from the order block is obviously the higher probable situation, or scenario or position. And the fact that this was also a two-sided fair value gap, so we had a green candle, red candle, as opposed to a one-sided, a more high probable setup, which is here, which actually violated too. But this is a one-sided, where all the candles are the same color, as opposed to a two-sided, which has a higher likelihood of being invalidated. That should have been a sign to me that, yes, that fair value gap is formed, but not maybe from an entry perspective, but from more of a confluence to say that price has a high incentive to trade up into the order block that's resting above it. And had I zoomed out a bit and focused on the 4-hour as opposed to the 1-hour, I could have spotted that tiny detail. And so, yeah, that was a bit of a key takeaway from me on this setup in terms of how I could have improved it going forward. And yeah, I just mentioned it there. The trade was taken from within 1 hour, one-sided fair value gap, which was also a 4-hour, two-sided fair value gap, which price violated to reach the order block before reversing. So yeah, I think a lot of lessons taken away from this. And then yeah, kind of just going through my tags here, which will just build onto the data that I have. And then the second position I took, I want to take you guys through the pound JPY position before the Euro USD, because we were kind of on a train of, and we understand this move now, and the high time frame behind it and all of that. So that I don't have to re-explain it, I'll just come to that trade. This one was long though, so met the plan, just didn't work out. So long setup, let's work through it. Interbank price delivery algorithm, no. We were distributing into the setup, or into that entry area. So nothing there. Nature of the reversal candle, as you guys can see, was this green candle here. Please don't do that. So yeah, retrace actually. Retrace candle. Yes, there was an order block, but key detail, we didn't violate that, which is something I'm also taking note of now. Did a secondary order block form? Yes, 1 hour to the 15 minute. You guys can see this 15-minute bullish order block that formed here. If we just go to the 1 hour, where's the order block somewhere? Oh, it's this one. Uh, that's the order block. Make my order blocks blue like they are in my normal chart. That was an order block, and then we formed the order block on the lower time frame. Was there more resistance to the upside or downside? This is the same question as the last one, but I said upside. Price had cleared the 1 hour low resistance range. I was taking out liquidity to the downside. Yeah. So yeah, and that's arguably something that is kind of worked probably against me in this position. But yeah, we did clear. We did clear this low here, and so, and not that we actually cleared it. I think it's more of we ran that liquidity, but you can see we reversed higher straight away. So I think the entry was just a bit premature, in that arguably a bit range bound here, trading between this sort of wedge. But yeah, the conversation is the same as the previous. We had the 4 hour, 4 hour order blocks on the 4 hour, and we were within this 1 hour range, targeting the downside. We had taken out this low here. We had, well, the short was obviously clear of the 1 hour low resistance range, and then respected that, and then coming lower. So hence the 4 hour, the 4 hours coupled with then price respecting these highs here, motivate that move to the downside. So yeah, more resistance to the upside, for sure. When did price complete protracting? After the kill zone. Entry was taken at the end of the kill zone as well. So just jumping back down to the 15-minute. So as you can see, the entry was at about 17:45, well, 6 o'clock. That's, the last, the extent of when I can take entries, because my kill zone runs, well, my New York kill zone runs from 3 to 6 o'clock South African time. And that's something I'm observing in the sense that I'm looking for the manipulation or the protraction at the start of a session. And so if I'm taking an entry at the end of a session, then can we not argue that I'm actually not the price is not protracting at that point. Price is actually distributing, because if it was protracting, that's something that normally happens or starts before a session begins, and then we distribute over the session. Obviously, New York session hadn't ended at this point. We were just ending, that kill zone, which is a high volume period of the kill zone. But if I'm going to get, or if I'm targeting, a liquidity rate or traction, then that should occur, max within an hour of that kill zone open. So that's another sort of variable that I'm kind of looking at. And I don't want to become too restrictive with my setups, because we could arguably be range bound for an hour and a half, and then we only, take out liquidity after an hour and a half. So I don't want to cut it off just yet until, I can see enough winning trades playing out that indicate that, I'm executing within a certain period of time after the kill zone open. So that's that. But it could just something to note. Does the 1 hour EPD align with where the market tracks to? I said no. 1 hour structure was bearish, and the 79% OTE level had been mitigated. Price had now reversed and heading short to TP. Basically, 1 hour range was playing out now. We had pulled back, cleared that low resistance range. As you guys saw here, this was the pullback, reversed, small consolidation, and heading lower. Technically targeting these lows here. Haven't got that yet. Was looking for an entry here. I'll maybe walk you guys through that at the end if there's a bit of time. But I do think price is going to head lower. I'm looking for an entry long below some lows in this area. But if there's some time, I'll take you through that. And then did the market distribute counter to traction over the session? No. We were arguably already distributing lower, so the traction wasn't actually bearish. I don't think there was even in the session. Was price still in the daily EPD area? We've established it was not at EPD. Was price in the 4 hour EPD? It was still at EPD equilibrium, as we also established in the previous setup. How large was my stop relative to the average? Not enough data still, but the stop was 45 pips. GJ is strange like that. Some pairs I'll put like 150 pip stop, others like 80, like you saw before, this one 45. So hence I said I need more data on this just to kind of establish an average. And then if I re-entered, what was the outcome? There was no re-entry opportunity here. So yeah, nothing there. So this one, while it did meet the plan, I think if there's some key takeaways from it, it's that we were still within that 1 hour range, which had arguably pulled back, cleared the low liquidity, low resistance range, mitigated the 4 hour order block, and then we started coming lower. We then took out this liquidity to the downside, which was signs of price then beginning to respect upside liquidity. Yes, we did reverse from here. This occurred over New York Asian session, so there was no entry, and we've pulled back. But I think this pullback was just temporary, also just to take out the last few stops. This was the protraction at New York today, but there was no entry for me. And I do still think we'll ultimately come lower here. I think we are in a bit of a deeper pullback before we continue to the upside that began when we mitigated that 4 hour order block, which was in the 4 hour sort of optimal trade entry area that I showed you a bit earlier. So I think GJ is coming lower, maybe for the rest of the week, but potentially just to give us the buys that are going to then play out potentially Friday, if not tomorrow. So that was the two trades on pound JPY. Yeah, a lot of insights from those. One met the plan, one didn't. Just all contributing to the data. And then now let us look at this Euro USD position. So in Euro USD, I've said yes, price was or the IP or IPDA was noticeable. This one was a unique one though, something I've only heard of and never really experienced myself. But if we look at the nature of this, and I'll just revise it in a bit, but I wanted to leave it out for you the way I was seeing it. When I initially saw this, I saw this as consolidation. Well, this as one big consolidation, and then we had the expansion to the upside, and then I was seeing this as a reversal, which was incorrect. What we really have is a consolidation, and then we have a liquidity rate to the upside, and then we have a liquidity rate to the downside below the move that took out upside liquidity. So we're taking out, it's just really, it's like a seek and destroy kind of environment, because if you took that as the sweep and then obviously shorted it, then you what stops below here, then you would have been entered in a bit of profit, but then your stops would have been taken out. And if you took this as a sweep, um, then you arguably would have been in a better position. And then price obviously distributed higher, we retraced, and then we continued to the upside. But the way I think most accurately depicts it is if we just pull this back and view that as the consolidation. This is the expansion. We then pull back into this consolidation, respect it, and then continue to the upside. What threw me off here was that this was at 9 o'clock when London opened. And so I was a bit confused by this move that started trading a bit lower. I didn't take this as the protraction. And then arguably more displacement to the upside with this large green candle that I then interpreted as our expansion to the upside, and automatically, because of the bias that I had, then took it as a consolidation, expansion, and reversal type of scenario, which it wasn't ultimately. And so yeah, I took the trade here, and then was stopped out way up there. Did a secondary order block form? No. Nature of the reversal candle, you guys can see I took it here. That was a retrace candle. Could also be a double opposing, but this first wick here didn't really move much, so I just took it as one retrace. And then, was there more resistance to the upside or downside? I actually didn't answer this, but we were within a daily order block, which I'll share in a little bit because I'll go into the whole bias here. But there was technically more resistance to the downside, and I'll explain why in a little bit. Downside, as price was nearing TP. So I basically got my bias wrong here, even though we were in a daily order block. I'll explain why again in a minute. But I suspected I had the bias wrong, but I held on to my bias just to kind of see if it was going to play out or not, and it didn't, which then confirmed, the change in bias that I'd suspected. But yeah, we'll run through that. And then when did price complete protracting? After the close on open, after all this mess that you guys can see there. Did the 1 hour align with where the market's protracted to? No. Did the markets distribute counter to the protraction over the session? I said yes. I said protracted lower and then distributed higher. That was just because I guess the last sweep of liquidity was technically to the downside. So taking this as the true sweep of time-based liquidity before we then expanded higher and then reversed and continued to the upside. And then was price still in the daily EPD area or well on its way to TP? In my forecasting template, I said yes, price was in a deep premium, but price was actually still in discount. And I don't think I can do the weekly here because that's where it kind of starts, but I will try. And I hope I have all the, yes, we do. So what my original bias was, and I will clean this up here because I think it makes sense for this to be, let us use one color. Let's take away the backgrounds. I mean, that's not important. Check out what we don't need. Yeah, seems a bit cleaner. So this was originally how I had sort of forecast the pair, where I said this was my start point, this was the extreme level, and we were distributing higher or reversing higher in premium now. And then, as you can see here, this is the daily order block that I had marked out. Again, need to fix this up. That's the daily order block we had marked out. So you can see price was in that, for me, in a deep sort of premium. But then I think it was late Monday after I'd confirmed my bias. I sort of observed that while, yes, I've taken this from a high, projected it down to a low. Arguably, it's the parent swing from this high to this low. On the weekly, yeah, it's just not available. What makes more sense is taking this as the low or the start point. Let's just taking this as a start point and then projecting it higher to this swing point. Oh, this is painful. To this swing point, and then seeing this as price pulling into deep discounted areas and then coming higher, actually targeting TP, which is this high. Because on the week, it's clear on the weekly, but this for me is much more of an impulsive leg than this setup or this price action here, that strikes me more as corrective price action, and so to pull the fib from this point, one makes more sense, just looking at the nature of price being more impulsive as opposed to corrective. But then as well, if we look at the daily and just monitoring liquidity and what's being respected, what's being violated, we can see the upside is constantly being taken out. Prices is taking out that buy side liquidity from this point here. So there's clearly more resistance to the downside. These levels are not only being respected, but they're just not being tested as at all. So price was just in this consistent trend of heading higher. So those were already two signs. And then the pattern trader in me that just does not want to die is seeing from this point where we came down from that low, left shoulder, head, and we typically see a reaction from the 50% or that 62% level, a reaction. Before then we come lower, sweep of time-based liquidity, right shoulder, left shoulder, that comes lower than the right shoulder. And then we've been trading higher ever since. And obviously we target then, the beginning of that move before the left shoulder's formed. And then obviously our neckline here and all of that, but that's going into sort of entry detail. So on the daily, it was pretty clear. It's just frustrating that, that I didn't have that bias going into the week, because then arguably I would have been wanting to position myself to the upside. But I think that's what's that caused me to be a bit more cautious today. And even though the position I'm going to show you now in a bit is sell, because that just ticks so many boxes, I maybe would have taken or attempted to short this pair again, off the back of this bias of we're in this daily order block, we're at premium, past the 79% level, and we're heading lower. So yeah, I think the bias has just become quite clear for me, and being stopped out validated that long bias on this pair. So yeah, that was our daily EPD. 4-hour was not at EPD actually. How large was my stop? Stop was average on this pair, and then there was no additional entry that played out. So that was the Euro USD setup. Because I think, honestly, could have seen it in both ways. I think the bias was just wrong here. But from the way I analyzed it, it met the plan. I don't want to say that it was an invalid trade. But I think it's just those small details that ultimately affected the bias, and you can always see things in different ways. It's just obviously what plays out more often than not. On a different day, maybe this would have been respected and it would have tumbled. But yeah, just not today. And then that was the loss on this pair. And then I want to take you guys through the Euro USD misposition from this morning's London session, because I just think it was just a mad position. Take you to here before we started. And I didn't have any data on it, because hence I said it was short, but I said to be determined, because I wanted to back test it in real time, so we could see what the actual outcome is going to be, instead of me kind of thinking I would have gotten a certain TP in hindsight, but then yeah, that wouldn't have actually been the case. So just pulling up this position. Right. So we said, firstly, yes, the daily order block at this point had been violated. If we just that was 4 to 11. So let me just take it back. Daily order block had been violated. We were now trading within this 4-hour order block, which you can see here. That was an order block trading in on the 4-hour. And then I'd said something I'm also taking notes of now is that we were obviously within this 4-hour now. I said the previous 4-hour candle kind of closed bearish, and we invalidated this two-sided fair value gap. So this fair value gap here. So that was a key detail for me to note, that we had that inversion. So that could potentially indicate that the next setup or the next 4-hour candle would potentially be bearish. What we had on the 1-hour then was still a clear 1-hour range to the upside, so we were bullish. Hence, I was a bit more cautious on this bullish. This was our range, fib at 50%. That 50% fib lined up with this 4-hour one-sided fair value gap. So I'd said to myself, if I am taking a short here, I'm targeting this fair value gap here. But nothing, structure hadn't shifted on the 1-hour. Price had pulled back here, and we had kind of impulse lower over, arguably not too much of an impulse, more corrective over Asian session, but nothing crazy. And then I think we got this low, which was the extent of that run. So I'm going to project this because I think I did earlier. And then just jumping down to the 15-minute, we have is now this new range here, and I was anticipating protraction to the upside to obviously take this short. I also had this 4-hour, this 15-minute order block here as a confluence in terms of where I was looking to take the entry. That lined up quite nicely with this time-based liquidity sweep, which was just a sweep of session, a session high. And so we saw price aggressively come higher. And then I see near miss of that. We've swept this liquidity, order block lying above. We are in the this 15-minute or 1 hour, if you want to call it, but more 15-minute premium. And something I just wanted to also take note of is price respecting the midpoint of this order block. Because Michael normally says if an order block is valid, price shouldn't retrace more than 50% of that, or retrace within 50% of that. So I had that there, that 1.228 level, just as a point that I was monitoring price, or just taking note of whether price would respect it or not. And so you can see clear protraction to the upside, kind of drop down to the 15-minute at this point. And then you can see here, we had this order block that formed on the 5-minute time frame. And then as we formed, and then as this candlestick also respected that midpoint, that 50% level, because we literally reversed right there. I dropped down to the 1-minute time frame. Drop down to the 1 minute. You can see there's another order block here. We've retraced lower. We had this run of time-based liquidity. Stop. OTP, OTE. This one now formed. And I just want to mark out the 5-minute level quickly. So then I was looking for that to be mitigated. Just for price to trade below that point. Yeah, which is that open there. So we then got to push lower. We mitigated. So we formed this order block. We invalidated that order block, formed this 1 minute fair value gap. If I pull a fib from the high down to the swing low of where we ran to when we invalidated that 1 minute order block, and just make that EPD, we can see that price literally pulls back to that 50% level. And look, even if it wasn't exactly to the pip, and I waited for this 1 minute to close after mitigating both this fair value gap. Actually, there's three things that kind of got mitigated here. It was this fair value gap, as well as a retest of this order block that got broken, that got invalidated. It got it to the upside. Taking the entry at this close, at the next candle, you can see how this played out, and then stops just above here. Even if I just had it at 6 pips conservatively, just to put it above, but I mean, it's like if it invalidates here, then the whole move is invalid, arguably. But I'm not comfortable having my stops this low, arguably because I don't trade on the 1 minute. But we can just have it there for the purpose of that. Just double check that it meets the 1:3 risk to reward within the range it's trading in, and it does. Even though it comes below its current lows, we would target either these equal lows or that low there. But remember, I'd said on the 1 hour at least, I was targeting this fair value gap. So 1:11. My TPs are arguably a lot more conservative at the moment. I'm not looking to catch that whole move. So even just down to just setting it at a 1:3 minimum risk to reward, which is still a really good risk to reward. Let's start to kind of just detail this trade. EURUSD short was today. Time was at 9:32. Stop loss 5 pips. Entry type. If we're taking it from our current bias of EURUSD daily on its way to TP, 4-hour pro trend, and my entry then arguably counter trend. So that is a pullback position. Pullback rider, counter trend position. I don't know any of this. Daily. Had mitigated discount. 4-hour pro trend established. 4-hour was within an order block. I'll say bearish order block, just for clarity. And then our entry criteria, were within our London kill zone. So just keeping in line with what we look for on the left here, just so that you guys also are clear that we're meeting the plan. We had mitigated. 4-hour was pro trend. My entry was counter trend. So we looked at his price within a key indicator area. We were within a 4-hour bearish order block. We can proceed to execution. Are we within London New York kill zone? We were. There's nothing really on the 1 hour at this point, but I just said we clear that structure was bullish. We hadn't yet established a move within that low resistance range, so we can argue that there was still technically more resistance to the downside because price had been sweeping buy side liquidity. 15-minute price was retracting counter to my bias. We see that in this protraction higher at the kill zone entry, and this is something I was talking about, remember earlier, where I said price, I should be technically taking positions very close within that kill zone open because that's when the protraction occurs. The price doesn't protract for 3-4 hours. It's a distribution at that point. So I think the time variable will be a key sort of factor in defining protractions for me personally. 15-minute reversal candle. So we did technically, but this wasn't a 15-minute entry. Hence, I said it didn't meet the plan. So I think this is probably the only criteria that wasn't met, but we did get a 1:3. Stops were refined at this point. Refined because we place our stops even within a 15-minute order block, but that was because that's what was relative. Because technically, if we trade above here, we are invalidating this order block, we're invalidating the 5-minute one. We will still be respecting the 15-minute, but this is a 1-minute entry. So that's all I'm only looking forward to respect that. So we have that. We had no high impact news. Our stop loss, no, actually, I don't put that there, 5 pips. And then just looking at my execution, 1 minute for now. So in 50, let's see. So we play price. Now we can go to half risk. We've gotten to 1R. So we remove some risk table. And then see how this plays out. Go in, that's 2R. So now we can move stops to break even. And we close 50% of the position. So we know we would have at least closed up 0.25% at this point. We're letting the rest run. The max we're going to get on this is that 0.5 odd percent, so like 0.5%, because I've closed half of it. I'm letting the original 0.25, 0.125 now of what's left on the position. Our math is all wrong. I'm going to calculate this. 0.25 is the position we put on. We close half, so we get to R, so times 2, we had 0.5. We close half of it. So we close 0.25 profit. We had 0.5 profit, 1:2. We close half, 0.25. The original position though was 0.25. So if we close half of that position, we left with 0.125 of the position that's on. No, my math actually it was decent. It was right. I'm modeling. And then that original 0.125 then runs to 3, which is 0.375. So add that 0.375 to the 0.25 that we closed is 0.625%, essentially the max that we can get on this. Worst case scenario, we get stopped at break even and we walk away with the 0.25% that we closed out. So yeah, at this point, I can kind of just let it run and see TP hit. So exit also on the 1 minute. This just would have been a clean trade, and it just played out so well. Everything just kind of made sense on this position, even though and I'll just let it run a bit after. So we'll 65%, and so just share. Percent bank. So that ran, and it's crazy. That's literally to the pip, more or less, where it stopped. I think it might have gone down a bit lower, but it's a bit irrelevant at this point. So that was the mistrade, literally to the pip. And then we come back higher, and I think we ultimately ended up trading a lot higher than that. But for, if we were just wanting to target session liquidity, which is the objective of some of the positions that I take, discounting what the higher time frame was doing, that would have been a very, very clean setup. And I think the more I get into this 2016 mentorship and potentially some other courses after that, I may start to incorporate some of these entries. I'm not on the 1 minute yet. I'm dabbling in the 5 minute. Hence, I even looked at it today. The criteria is just different to enter, but I don't take a lot of setups on there. But this is something I'll definitely start back testing, because it just starts to give a lot of clarity. I think especially from the 1 minute shifting and then starting to respect. I did have another entry here. I'd said, look, if the 5 minute, I'd set a 5 minute limit order, and I said, if the 5 minute doesn't tag me in, then I'm going to just take the entry at the close of the 15 minute, which would have been here. And by the time we got down there, I was like, this is with my stop all the way up here. Look, it's not a big stop, 18, 19 pips, 20 pips as the average. But I said, if I'm targeting, my TP of this fair value gap here, I'm not getting my minimum of 1:3 on the position. So it technically doesn't meet my plan. If we look at the last step, which is, does the trade provide 1:3 risk to reward? no, then there's no trade. And in this case, there was no trade on 15-minute at least. Hence, I didn't take it. So the end result, 0.625, profitable session on a full risk position. That is that's a 3% trade. Could have been done for the day. But yeah, those are the positions so far this week. A lot of lessons taken away from this, which was the purpose of the session and something I definitely want to start doing a lot more. Again, it just brings a lot more clarity, a lot more awareness to the quality of positions I'm taking. But then I think also actively highlights things that I'm maybe not aware of. You saw there were a few mistakes in my journaling that I picked up now when I'm kind of going through it with a fine-tooth comb. And I think that's just sometimes what happens when you're kind of journaling on your own and there's not kind of like a platform that you're journaling with or to. You miss some of those details. And so, yeah, I hope there was value that you guys took away from this. I definitely learned a whole lot, and I'm walking away from it that much more confident in um, the strategy and the plan. And I think starting to become a lot more comfortable with the nuances of the strategy and how I implement the plan, and just excited to see how those minor tweaks or observations start to play out. As I introduce them into my back testing, which will then ultimately lead into better execution of my current plan, but then also minor tweaks to be made to the plan that's going to change. So don't forget, guys, consistency is the choice you make when you start doing the things you should be doing day in and day out.